Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 23rd, 2022. It's 11:55 a.m. Eastern Time as I'm starting the video, so midday update. Really, what I want to cover in this one is commodities. Every now and then, I like to do a fairly comprehensive overview of different commodities. Still maintain and have for a while. We're in early stage bull market action, and as such, after corrections in those bull markets in the various commodities, those are times to start getting back into swing or trend trades. And I'm going to get to that in 1 second. I'm going to start out here with just a quick update on the NASDAQ. I told you during the holidays I kind of cut back on my trading. You tend to get trading volumes drop off and you get more whipsaw signals. So yesterday, before I left for the day, I got a post out to you here. We had pulled back to that trend line. You know, we had this first setup here. You had the positive divergence. This is an hourly chart, 60-minute candles. Broke out, ran up to hit T1, had a pullback to the trend line, but then just kept going right on through there. And again, trading volumes have been low, including yesterday. And then you had just a sharp bounce back to backtest the trend line. That's where we are right now. So if you zoom in, well, first of all, we do have the same divergence that was in place at this low here at the trend line is now even larger there on the PPO. You have the RSI almost divergence there. You have a slightly lower low, almost equal, but it's slightly lower low. So not ideal. And there's your uptrend line. So we've been back testing that. Let me tighten it up for you. Come on in here. 60-minute chart. So if they can pop that, and it's still, I'd put coin toss odds on it. It's really, like I said, kind of whippy this time of year. A lot of tax loss selling, position squaring at the end of the year, window dressing, but there's still a decent chance to rally up if these divergences play out. And here's the thing, we also have it on the S&P 500 futures, ES. This is a 60-minute chart. I'm just zoomed down to hourly candles here. 60-minute candles, just 1 month of price history. But you can see we've been diverging, just like we had that divergence there on NQ that played out for that first rally. And like that, we had a little trend line that was broken, a little sell-off, but that has given us, just like NQ, virtually an equal low there on the RSI versus lower low in prices and higher lows in the PPO, which is positive divergence. So that could carry us up. Again, coin toss odds. If you want to trade them. But if not, let me get into this video here. There's that same downtrend line that we had on NQ that gave us the wedge. So it's really a wedge breakout and a near back test of the recent lows, a slight undercut. But we're back above there, and that's something to note too, both in ES and NQ. We undercut the previous low and then we recovered it. So it could give us an upward bias, but you got to watch that trend line on NQ. We need to take that back. That's talking about this one right here, which you see better when I zoom out to that 3-month chart. That's what I gave you before. We need to go here, 5 months, then take it back down to 3 months. That's how we have to do it. There it is. Boom, boom, boom. All right, let's talk commodities. That's what I really wanted to do in this video. And in no particular order, I have a commodities watch list. It's all ETFs and ETNs. And I'm going to cover those. They're just sorted kind of randomly. And I'm going to start out here with NIB. Now, from time to time, I do these commodity videos where I cover just pretty much the whole spectrum of them. And I still maintain by just about every metric that I have, we're in what seems to be early bull market action following a bear market that generally ran from 2008 into the recent lows. 20 depends on which commodity, 2020, 2021, some in 2019. And this is NIB Cocoa ETN. Last time I highlighted this one was right here, right after this divergent low. We had a pullback to support with positive divergence, and I mentioned this as an objective long, and it's carried quite a bit since then. It's up. I think maybe it was the second to last video where I covered broad-based commodities. It was right here. It just come off that low. But I'm just going to measure from that divergent low to show you the kind of rallies that you can get from these guys. It's about a 25% rally off that divergent low. And the bigger picture, and you look at the weekly chart on NIB, again, the Cocoa ETN, you have big old symmetrical triangle pattern right here. You broke down below it, and in doing so, as I mentioned recently, you put in that divergent low. You can see it here on the weekly as well, and we're starting to pop inside that triangle. So if we can just build on these gains a little bit more, we're going to re-enter the triangle, which then increases the odds that we'll do an upside hit of the downtrend line, and then ultimately a pop above it, because that would be just one big false breakdown. And remember, we're still making a series of higher lows. This is why I maintain cocoa bottomed a little before a lot of the other commodities back in 2017 here. And again, if you just look at it from this metric, higher lows, but we need to take out, and I believe we will, this level. That's about $35. That's pretty big resistance right here. It was support back here for a while, and that should open the door all the way up to about 44. And that gives us, if that's hit, which is a target, swing trend target, that's about a 56% gain. So there's NIB, cocoa. Sugar recently, there's two ETFs or ETNs out there, I should say. ETNs are exchange traded notes, a little bit different tax structure and structure altogether. But there's a breakout above that recent trading range right there. That's nothing but bullish. You do have some negative divergences forming, but this is a pretty powerful breakout. As long as that breakout holds, that's going to be good. I'm going to, oh yeah, Kane is next in line. Kane, just a different ETF company or ETN company, and it has a comparable level. So really, when you see Kane and SGG put this this trading range in the rearview mirror, that's going to be pretty powerful. This is what it looks like on a weekly chart. Again, it speaks to the fact that we're coming off a bear market in commodities, including sugar and just about everything else. That was your bear market, bottom right there in 2020, and you've taken out all these previous recent reaction highs. That's indicative. That is, what an uptrend is. It's a series of higher lows and higher highs, and that's what we've been doing in sugar, and I don't see any reversal. I think this is going to be one of the a multi-year bull market in commodities. So a lot of room left to go. If you look at just and again, this is just an ETN, so it hasn't, it's not showing you 30-40 years of history, but just to get back to where we were in 2011, which I think is very doable, would give us another 170% rally in Kane. And then SGG really doesn't go back as far. So let me give you the next one. DBA, some of these are just general commodity ETFs. This one is the Invesco Agricultural ETF. And it has, as I said, if you want to hit the ag sector and you just want one shot, kills all or covers all, this is your go-to commodities or agricultural commodities ETN. So you're not going to have gold and silver and industrial metals. You're just going to have the ags, such as live cattle, soybean, sugar, corn, cocoa, wheat, coffee, hogs, cattle, cotton, all that good stuff. And again, just every now and then, don't forget to take a look at the big picture. And that's, you jump back to a weekly chart or go to a longer term chart. And then you can see this was the tail end of the last bull market in commodities. Peaked back in 07 right there. And we've been moving lower since. This is a bear market. An unusual bear market, because usually commodities go up and down with the stock market, but we were in a deflationary period, and commodities had a bear market. So both the fundamental and the technical case, in my opinion, couldn't be any stronger. So I just continue to maintain, especially on pullbacks after corrections. Everything in a bull market's going to get ahead of itself. You're going to get corrections, then the next leg up. And so I think it just makes sense for long-term funds, the piece of the pie. Everybody's different, but let's say you want to put, third of your money, 30%, whatever that number is, into commodities. In a bear market, maybe 30% short equities, and then 30% other. That could be cash, gold, silver, whatever looks good at the time. But I do think commodities, especially now that we've had this nice correction, you can see here, nothing goes up forever. You get ahead of itself. Remember, DBA, a broad-based, well-diversified commodity ETF, rallied about 76% off the lows in 2020. And, like everything, it gets a little ahead of itself, put in that divergent high right there, negative divergence, and that divergence has played out. It took it back down to support, really good support, about $19.50 right there. Probably the end of it, especially in a bull market. So if it can rally from here, you want to see take out that previous high. If it happens to drop down to 1839, that's a good buy as well. That's also support. Maximum support I'd like to see it go down to. If it got there, it'd be about 1680. I doubt we're going to get there, but that's certainly possible. And those would be your buy points for a long-term investor. Next up, UGA, unleaded gasoline. So here's a way, if you, let's say you run a business or even personally you want to hedge against rising fuel costs. You can go long gasoline futures, or you can buy the gasoline ETF, and so that way if prices go up, you're benefiting, you're offsetting your fuel costs. Like if you run a small business, you have a fleet of vehicles, and fuel's a big expense, and you can use, just like the pros do. They use typically futures, but you can go into this. And again, we're in an inflationary environment, and gas prices have been going up, and nothing goes up forever. A lot of commodities got, pretty ahead of themselves, let's say, big gains, and put in divergent highs. Technicals said, correction time. There was a price channel. We broke down there, and we moved down. Then we took out the downtrend line right there, and we also had a positive divergence at the low right there. With the arrow, popped above there, and rallied up to that 66.52 resistance. Had a pullback, which just gave us a little bit bigger divergence. So much to the chagrin of Washington and the Fed, looks to me like we're going to see more upside coming in gas prices. Should it pull back and these divergences fail to play out, well, you got good support here at 40, what is that, 43.90, and then support all the way down here at 35.18. Let's give you the next one, JO. Again, these are in no particular order, just how they're sorted in my watch list. This is coffee. It used to be JO, and then they changed it to JJOFF or something like that. That's so you can see longer term. That's the one with less volume now. There was a lot of restructuring in this, the iPath ETNs. But you can see, same story, it's been in coming off a longer term bear market, and put in a big divergent low there on the weekly that said start buying coffee. Looked like the bear market may be over. And then we did. We started taking out previous highs, previous reaction highs, and this looks to be the first leg up. Correction back to support right there at about 1360. And so the next leg up should take us up there somewhere around $26. That would be from where we're at now in coffee, a rally of about 80%. So go back to JO. You can see these thin candles. That's the one that they're now supporting this ETF or ETN, JO. And that's it. Little, in a bull market, especially after big corrections, you want to see if you get these positive divergences on the daily chart. That's usually all it takes to get to the next leg up. Alrighty, next up, LD, very thinly traded. This is lead, but like everything else, industrial metals as well. It's in a bull market, got ahead of itself, put in divergence, and like everything else, had a correction, and it's been rallying since. I don't have a strong opinion on that one. Coal, that doesn't trade anymore. That was a coal sector ETF. Corn, CORN is the symbol for that one. You have a downtrend line here that if and when popped, should trigger the next rally up. There's obviously some reaction highs there that need to be taken out, but again, just take a step back from time to time and look at the bigger picture, and you can see that corn peaked back here. You had a end of a bull market, and it's been a pretty nasty bear market. And I think most of us realize now that we are in a early stage, or again, I'll maintain early stage bull market action. We put in a divergent low there. We took out the primary downtrend line, and we've taken out numerous reaction lows. And so in a bull market, that's what you want to do, is buy pullbacks to support. That was the last nice support level right here, about $23. And again, if you want to zoom in to look for the next objective long entry, it would be on a break above that trend line. I could probably even put a, let me see if we have a little triangle or some type of support here. Yeah, something like that. I like to look at the futures as well, which I'll do, but either way they look, corn looks pretty good right now and looks better if it takes out the downtrend line there. JJS, this is an ETF that has the softs, which are cotton, coffee, cotton, and sugar. And again, they all look similar, especially these ag commodities. JJU, the aluminum, Bloomberg Aluminum Index ETF, and a little uptrend line there. But most important, you put this this divergent low right here, positive divergence, and it's been walking its way up since then. JJG, grain ETF or ETN, you have corn, soybean, and wheat. So if you want to just focus on those, like everything, we had a little, well, this one wasn't a divergent high, it was more of a buying climax. That was when, the whole Ukraine thing and Russia and wheat prices went parabolic. And when you see a parabolic move like that, usually you get a pretty good correction. And that's what happened. We corrected, came back to the support zone right here, put in had a divergent low right there as a positive divergence. It's kind of moving sideways since then, but I threw out wheat as a trade idea the other day. That was ZW if you trade the futures, and I still like that one. This is what it looks like. This was a hourly chart I think I gave it to you on. You took out the downtrend line right here. 60-minute downtrend line was taken out. We had a divergent low right there that marked the bottom. We've been walking our way up here. I added this uptrend line recently. So ideally you want to see it stay above that, and any pullbacks to the trend line would also be objective long entries. Same targets I gave you the other day. So that one's still looking good. And we'll get to the wheat ETN in just a second here. It's coming up in about 4 more. PALL, Palladium. From this daily chart of the ETF, PALL, you can see it took out that 166 support, but that's the glass half empty. Glass half full is, precious metals. I'm still longer term bullish on gold and silver, very much so. I'll have some near-term concerns with the dollar and the euro, what they may do, so we might continue to slog around for a while in gold and silver. But there's positive divergence on palladium, and I want to show you the futures real quick. I have an alert set. This is a 3-month hourly chart, 60-minute chart. You can see this nice level right there, about 1744. 60-minute chart has positive divergence. We're coming off, so if we can pop that, it could get a quick run up, maybe even more on palladium. So we got to pop 1744, and you can either trade those futures. That's PA, or the palladium futures I just showed you, or PALL if you want to use an ETF. Let's see. I didn't even look at the 60-minute chart, but it's gonna look identical. There's that level right there. You need to pop, and that could get us a little spike going in palladium. Alrighty, next up, USO oil. Well, crude oil pretty much came down to that swing target. I had 560 and or the uptrend line. That was from so long ago. Well, the uptrend line, that was back here. The uptrend line ended up coming in first, and you had positive divergence, and there it is on crude. Crude's been moving up, but we're at resistance right now. In fact, it looks to me like a little pullback's coming here. CL 60-minute chart, crude futures. And you can see right here we're diverging on the 60-minute chart, so that could give us a little pullback. And at not big. This is minor resistance, about $80, but I think that could give us a pullback. And then if we do pull back from here, get rejected off the 80, a break of this trend line would probably bring us a little bit lower, maybe a back test of this downtrend line. So there's a potential trade idea. Now, it's in an uptrend, so if it can pop that, it may want to head on all the way up here to the next resistance around 83.40, but I suspect we'll probably get a little bit of pullback here in crude oil and down to that trend line, and then maybe even just, if you get it, if you take a shot at it, again, I don't have high convictions on a lot of things here at the end of the year, but set your stop somewhat above, and then just trail it down, maybe allow for a little bounce off there, and then target either a back test of that trend line, or I'd say right about here. I'd say there's definitely some a decent price support, and that level is about 75.50. All right, moving on. COW. Cow is an ETF, has hogs and cattle. Looks to me like it's pushing up against this 40.62 resistance. Another way to look at it, it's been consolidating in that range, so an upside breakout would be bullish. However, you've got this divergence, so that kind of tilts towards the downside, in my opinion. Even if you have an upside break, might be one I might pass on, because if you do pop to the upside, you're going to have that negative divergence. Now, if they can take out the divergence, great. And this one's not far off all-time or 52-week highs. Personally, I like to trade lean hogs and live cattle separately. This ETF kind of lumps them into one because they have different charts at different times. One may be bullish, the other may be bearish. This is kind of a, well, it is. It's a hybrid of both. But here's that wheat ETN I was telling you about. And there's our primary uptrend line right there that was taken out recently. Remember, we had a divergent low there. We had a nice rally. And that divergence that we had at that low is even bigger now. So where we had a little divergent low, we got a little rally. We have much bigger divergence right there, positive divergence, which could set the stage for an even bigger rally. So minimum another rally back up to the trend line. But remember, bigger picture says that we are in most likely an early stage bull market action. This is wheat going back. As far as this ETN goes, 2011, you can see we had a nice peak there. There was our primary bear market downtrend line. We had big divergence heading into that low, and we had a breakout, a back test, and we've been in an uptrend since. And so, like I said, there was that little blow off top with the whole Russia-Ukraine thing, a lot of wheat coming out of Ukraine. And that gave us a correction, which did take us, I will say, it took us below this trend line, but that's one metric here. That's, ideally it would have, stayed above that trend line, but there's still plenty of support levels, and by just about all metrics, still this looks like early stage bull market action. And so again, if you just want to play the game, well, let's say, okay, let's say you're right, Randy, we're in a new commodity bull. Is it unreasonable at all to just think we can go back to where we were, on the previous highs in the last bull market? And that's about a 227% rally on WEAT to get back to where we were back here about 10 years ago, 2012. Next up, soybeans, SOYB. You can see here's our most recent uptrend line. We had a little downtrend line there. I'm not super crazy about it, but it was enough to have there, give us a triangle. But you can see this is a big level here, about 27.85. That's capped every advance going back to pretty much this summer. So if we can pop that, that should be bullish. And it also gives you this, this is called an ascending triangle pattern. When you have a flat line like that and then a upward sloping line, that's an ascending triangle pattern, inherently bullish. So break above there. And again, bigger picture, you had wheat peaking back here. I'm sorry, soybeans peaking back there in 2012. Embarking on a bear market since, with lower lows, lower highs. Put in that big positive divergence at the low, and it's been nothing but just a strong bull market since, and that's where we're at. This is a weekly chart of GSG. That's iShares, one of various broad-based commodity ETFs. What has energy, agricultural, industrial metals, livestock, precious metals, so well diversified. And again, you can just turn off all the lines real quick and not overthink this. Just kind of take a look at the bigger trends. This is where it peaked back in 2008, like a lot of commodities did, or on or around that time. Been a bear market since. That bear market ended with COVID, and the fact that we've taken out all these previous highs so far tells us this is just early stage bear market action, or bull market action, I'm sorry. And so let's just assume we go back to where we were, even in the middle of 2010, 2012 here. You're talking still another 80+% upside. if we happen to get back to where we were at the last bull market high, you have about 280% till we get there. Food for thought. All right, oil's just another. I'll get to USO. Did I already get to USO? Nope, I don't think I did. Did I skip it somehow? No, I got it. I already did USO. So oil is just OILK is another one. We don't need to cover it. It's going to show you the same thing, and that's right there. It's K1 free ETF, but you can see it at support right there. If you do trade this one, there's pretty good support there, about $40. So hopefully, well, ideally, I should say, for the bull case, crude needs to stay above there. CUT, cut. Remember, there is, to the best of my knowledge, has never been nor is at this time, and correct me if I'm wrong, if anyone knows otherwise, of a ETF or an ETN that directly tracks lumber prices. You have to trade LB lumber futures or there's that new, I pointed out, the mini contract or the smaller, it trades just a smaller quantity of lumber. But this is cut. You have cut and wood, WOD, are the two timber and in paper and forestry ETFs. They hold the individual companies that hold that profit from the lumber or timber industry, and you can see there's a downtrend line and they need to take out because the sector commodities are in a bull market that will probably have these companies outperform. Remember, they are equities. And in a bear market, just about everything that's a stock tends to get sold and goes down with the stock market. In most cases, there are some exceptions, but I don't know why that SAP is showing up in there. WY is one of the forestry companies, and you can see these individual charts. So they've held up relatively well, and again, because they are profiting from, they own a stake in a lot of the lumber and industry. Oh, let me show you that. That's what I wanted to show you is the lumber chart. LB. All right, we know housing's been sucking wind. Doesn't like 7% mortgages. This is a 6-month chart of LB. I just wanted to point out. Let me take it down to a 30-minute chart. Lumber's been in a downtrend because the housing market's been falling. But remember, we're in a commodity bull market. And there's going to be trades, and at some point lumber's probably going to bottom out, even if there's not crazy demand for the housing market. Just the fact that it is a commodity and you have a lot of institutions and individual investors that are going to invest of it. They're going to diversify. The stock market has been sucking wind all year and will probably continue to suck wind going forward, and therefore people are going to look for, both people in institutions are going to look for alternatives. So 60-minute chart, we have another divergent low right here, a positive divergence breakout, and that could take us up. I'm not crazy about it, and I don't even have a position right now. It's the end of the year. I'm keeping things light, but I think it could carry us all the way up here at about 445 if we can get some traction, at least that 413 level right there. So there's lumber futures for you. And next up, I already covered cut. There's wood, again, just another company's timber and forestry ETF. I don't see anything crazy about on the chart that makes me crazy about it. MOO, this is an agribusiness ETF. So not agricultural commodities, but companies that benefit from the ag arena, such as John Deere, Zoetis, ADM, Archer Daniels Midland, all these companies like that. You can see it. That's what makes up MOO. So if you want to, typically this is something you want to buy, or you don't want to go into this when the stock market's going down again, because this holds individual equities. So when we get an all clear sign to be back in the market for a nice bear market rally, then I think this will be a sector to look at. And who knows, maybe we get a rally in the beginning of the year, and that next leg down doesn't come until later in the first quarter or maybe second quarter. This one is back testing, so if you want to just be a market agnostic, neither bull nor bear, just look at the charts. Well, you put in a divergent low, you broke out, and you're back testing the trend line. So you could take a shot there, and with a stop somewhat below that trend line. Gold, remain longer term bullish on gold. In my opinion, this was one of the most bullish things I've seen in a long time when we took out that 158-ish, 157 level and then recovered it. That was a big support to me. and that was a big old bear trap, false breakdown, and gold's been moving up since. Of course, there's the euro, US dollar, which I've covered recently. I think that's going to continue to put some pressure on gold and silver near term, and has for a while. So it's kind of a maybe a little more sideways to downward action before the next leg up. And you can see that's kind of what we've been doing here, stalling out. And that's, again, largely because of the euro US dollar rallying into long-term resistance. Here's a weekly chart. If my trend lines load, this program seems to have frozen up for a minute here. All right, lines aren't loading. I'll just draw them for you. It's no big deal. This is the downtrend line on the weekly chart right there of a Euro USD. And there they go. And so we're stalling out at that trend line on the daily chart. You can see it here. Again, the daily trend line comes in a little bit lower the way I have it drawn, but you have this little wedge right here, bearish rising wedge with negative divergence. And so the dollar and the euro's kind of just going a little holding pattern. I think we'll get a little pullback there. And if we do, that should put some pressure on gold and silver. And that would be a buy point for the euro, sell point for the dollar, and a buy point for gold and silver, or to add on to any long-term positions. Silver, same thing. You have a downtrend line right here off the highs that we're at on SLV. And we ran into that with some divergences there as well. So maybe a little. It would be ideal to see a little pullback, but these guys, coming off those divergent lows in both gold and silver, and people aren't really wanting to let go of their gold and silver as of now. It's been more of a consolidation lately. So, longer term, I'm still bullish. I think we'll take out those previous bull market highs, so there's a lot more upside. But just near term, like I said, I think we may see a little pressure on gold and silver before the next leg up. JJC is a copper index ETF, and that's it. There's your uptrend line. Like everything, had a nice rally. Took out this little trend line here. You had this little rising wedge, breakdown back test, move lower, but it's been catching the uptrend line and moving higher since. There's some pretty good resistance overhead. If it can take that out, it'll probably run at the previous highs. And then most importantly, if it can take out that level of high level consolidation right there, you can see it right here as well in the weekly chart. That's going to be bullish and give us higher highs in copper. There's another variation of it, CPER, same story. DJP, very broad-based commodity ETF. And again, bigger picture, you have to sometimes just take a step back and maybe even turn off all the lines there, and you can see what's going on. And commodities, they peaked back there in '08, been moving lower since, bottomed here when COVID hit back in 2020. Did so with some big old positive divergences. You can draw them out here. I didn't have them drawn on this time frame, but there it is. So a big old divergent low, and there was our primary trend line, which probably should come all the way up here to the top. Yep, it should. So this was our bull market trend line right here, downtrend line that is. And so kind of officially, if you want, that's when the bear market ended. That's when confirmation that we were most likely in early stage bull market action, and boom, it's been a strong rally since. A lot more to go, in my opinion, over time in the coming months. And there'll be plenty of corrections along the way, and I'll continue to do these video updates from time to time. PPLT, platinum, kind of a little messy here on the, like gold and silver. It's had a little period here, right here, consolidation recently. So to keep it simple, ideally would you want to see platinum PPLT stay above 90, because that's also it's price support number one, but it's also the bottom of this recent trading range. And then you want to see it pop above there. That would be your buy signal if we can take out the top of the trading range, and that should send us up to that next resistance or target zone. BAL's cotton. This is another one I threw out as a trade idea. Gosh, I think back here, that might have been on the futures chart, CT. But so I would have laid out targets, and looked like we just hit that first target. I didn't do an update, but it's been hit now. So I'm going to mark that hit right there. We hit it 3 days ago. And then this is still T2, T3. and T4. Now you have a trend line that's going to come in as well. So that, if you get up here, for example, if we power on up here, take out T1, the next target's obviously T2. And then if it takes a while, whatever comes first, T3, with the price level is 70.38 or the downtrend line right there. And that would be, of course, a minimum swing target right now. So cotton still looks good, BAL. And last but not least, let me do an update here on UNG. We're getting away from that trend line, but I'll tell you what, I'm still giving it a little room here. You can take that divergence that we had right there and you can extend it. The divergence is not a buy signal. The thing about UNG, it's not the actual commodity. It's an ETN that does its best job, but there's a lot of slippage, contango, all that other stuff with futures. And these ETFs that are trying to track futures, they have to roll them all the time. So what you want to do is really keep an eye on the charts of natural gas futures. Let me pull that up. I haven't even updated in a while. But let me grab that. NG, natural gas. Here's the end of year seasonality. This is the one I wanted to show. Yeah, this one right here, weekly. No, that's a daily. Let me show you the weekly. Okay, this will work. Yep. All right, so see this line here? I've had this line here forever and a day, this black dashed line. It was resistance, resistance, resistance. We popped it, but then fell back below it, and it was resistance again. Two different reactions there, a major reaction right there. And so it's a line that it's been support and resistance for a while on natural gas, and that's it. We pulled back to it, we bounced recently, and we're back to it again. Remember, we put in a big divergent high recently, and just like crude oil and natural gas had those pullbacks. That's what gave the stock market its most recent rally. That was where Wall Street was getting all giddy and cheering, thinking the Fed has done their job and inflation's over. And again, in my opinion, it was simply a correction in an ongoing bull market. So you've come back to nice price support here. And you also have on, I believe it's on the daily chart, some positive divergence as well. I just showed you before, but let me show you. Yeah, I'll draw it out for you. This is just a daily chart of NG. Right here, equal lows on NG versus higher lows on the indicators. That's positive divergence. And again, you can see that on, let me show you one more chart because this is the last commodity for the video. This is a 60-minute chart, hourly candles. These just rolled before I was showing you the Januaries. Now we're on the February is the current contract. And there you go. Bullish falling wedge pattern, complete with positive divergences. We're right at the line right now. If we pop it, there is some resistance right here at about 532, 5326 or so. If we can pop that, it should take us up to that 5713 level. And quite possibly more. The wedge would, yeah, that's about where the wedge measures as far as the measure target goes. So let's just say 517 or 571 targeting for natural gas. All right, guys, that's it. Those are all the commodities on my watch list. So I'm gonna get the video out to you, and I don't know. I'll probably shut down for the day. If there's anything big that happens between now and the close, I'll get it on another video out to you. Otherwise, we'll pick it up tomorrow. Nope, tomorrow's Saturday. I lied. And I'm going to definitely leave town next week. I'm not sure what day. I'm going to shoot over to the other coast, head over to Miami. But I'll update when I can. If I need to bring my laptop, I'll do that. All right, this has been Randy Finney with Right Side of the Chart. Have a great